Respective presenters, gold production once dominated by a few countries like the US, Australia, and Russia until the 1090s expanded significantly after South Africa's discovery of the Witwatersrand Basin. By 2023, over 40 nations contributed to global gold production, with China leading at 370 metric tons, followed by Australia and Russia 310 metric tons each, and Canada and the United States producing 200 and 170 metric tons respectively. The total supply of world gold is around 4.9 thousand tons per annum, while the total demand of world gold is around 4.5 thousand tons per annum in 2024. Despite short-term fluctuations, the gold supply has grown by approximately 15.2% over 14 years, indicating consistent demand and production efficiency. Gold supply saw a moderate rise until 2012, peaking at 4.5 thousand tons before declining to 4.3 thousand tons in 2013. This drop may reflect reduced mining output or lower recycling activity. The supply rebounded with a sharp increase in 2016 to 4.7 thousand tons, marking the largest jump in the period. The 2017 and 2024 period saw smaller year-to-year variations, with a slight decline in 2020, potentially influenced by the COVID-19 pandemic disrupting mining operations. The supply steadily increased, reaching the highest level of 4.9 thousand tons in 2024, suggesting recovery and expansion in production capacities. The declines in 2013 and 2020 highlight periods of market or operational challenges, while the sharp rise in the 2022 and 2024 period suggests robust recovery post-pandemic and potentially higher global demand. Gold supply is primarily driven by a combination of mine production and recycling activities. The primary source of gold supply, contributing around 3.6 thousand tons, was mine production, while recycling activities accounted for the second largest source, providing approximately 1.3 thousand tons in 2024. Mine production of gold increased steadily from 2.7 thousand tons in 2010 to a peak of 3.6 thousand tons in 2018, followed by fluctuations in subsequent years. By 2024, mine production reached 3.6 thousand tons, reflecting a long-term upward trend despite some short-term variations. Over the 14 years, mine production increased by approximately 32.9% from 2010 to 2024, showing a robust long-term growth trend. The peak in 2018 marks the highest annual production during the period, The dip in 2020 highlights the vulnerability of mining operations to disruptions caused by the COVID-19 pandemic, including operational slowdowns and supply chain challenges. The post-2020 recovery indicates stabilization and possible new investments in the sector. Gold is a renewable resource that retains its quality indefinitely, making it possible to recycle and potentially reduce the global demand for newly mined gold. The recycled gold supply fluctuated significantly between 1.6 thousand tons in 2010 and 1.3 thousand tons in 2023, showing a general decline over the period. The trend reflects varying global economic conditions, gold prices, and consumer behavior. From 2010 to 2024, yearly recycled gold decreased by approximately 18%, suggesting a reduction in scrap availability or consumer willingness to recycle gold over time. Despite 2024's record average gold price, full-year recycled gold supply was nearly 20% lower than the 2009 peak. Two main factors contributed to this decline. First, distressed selling of old jewelry was minimal due to the fiscal support during the pandemic and energy subsidies in Europe, which shielded households from economic pressures. Second, the stock of old or unwanted jewelry available for reselling remains limited, as much of it was already sold off during the high reselling wave from 2008 to 2012. Global gold demand fluctuated over the 2010-2024 period, starting at 4.1 thousand tons in 2010 and ending at 4.5 thousand tons in 2024, reflecting an overall increase of about 8.5%. Demand reached its peak in 2011 at 4.7 thousand tons, in its lowest point in 2020 at 3.6 thousand tons. Between 2010 and 2011, gold demand surged by approximately 13.1%, driven by heightened investment demand due to economic and geopolitical uncertainty following the 2008 and 2009 global financial crisis. Gold demand showed a consistent decline during the 2011 and 2016 period, dropping to 4.3 tons in 2016 as global economic conditions stabilized and investment demand moderated. Gold demand remained relatively stable between 2016 and 2019, fluctuating slightly but averaging around 4.3 thousand tons per year. Gold demand fell sharply to 3.6 thousand tons, its lowest point, reflecting the impact of the COVID-19 pandemic on industrial, jewelry, and consumer markets. Demand recovered steadily between 2021 and 2024, rebounding to 4.5 thousand tons in 2024, fueled by increased industrial and investment activity. Gold demand is predominantly influenced by four key sectors: jewelry investment, central bank reserves, and technological applications. Jewelry accounted for the largest share of global gold demand at 44%, followed by central banks at 22.9%, investment at 25.9%, and technology applications at 7.2% in 2024. Jewelry consistently represents the largest share of gold demand, accounting for nearly half of total demand on average. It peaked at 2.7 thousand tons in 2013 as consumer demand surged, while jewelry fabrication declined significantly to 1.3 thousand tons in 2020, reflecting the economic impact of the COVID-19 pandemic. It recovered to 2,000 tons in 2024, but still below its earlier highs. Jewelry continues to be the primary driver of gold demand, bolstered by its deep cultural roots, growing affluence, investment potential, and evolving fashion preferences. Technology applications represent the lowest share of gold demand. Demand in technology applications decreased steadily from 460 tons in 2010 to 326 tons in 2024, reflecting increased efficiency and substitution of gold in manufacturing. COVID-19 in 2020 caused a noticeable dip to 302 tons, followed by modest recovery in subsequent years. Investment demand for gold shows the most significant fluctuations driven by global economic and geopolitical conditions. Investment demand for gold spiked to 1.7 thousand tons in 2020 during the pandemic as investors sought safe haven assets, while it declined sharply to 1.1 thousand tons in 2024, reflecting reduced economic uncertainty. The demand for gold investments is driven by factors such as economic uncertainty, inflation concerns, and the need for portfolio diversification. As a safe haven asset, gold attracts investors during times of market volatility and geopolitical tensions. Its role as an inflation hedge makes it appealing during periods of currency devaluation and expansionary monetary policies. Additionally, gold's low correlation with other assets enhances its value for portfolio diversification. The rise of digital gold platforms has further simplified access for retail investors, boosting demand. Central bank demand has shown a marked increase over the years, reflecting Strategic asset allocation trends. Central bank purchases surged from 79 tons in 2010 to peak of 1,000 tons in 2022, highlighting the growing importance of gold in diversifying reserves. It slightly decreased to 1,000 tons in 2024, but still a significant portion of demand. Central banks accumulate gold to diversify reserves, ensure economic stability, strengthen geopolitical positioning, and preserve long-term value. Gold helps diversify foreign exchange reserves, reducing reliance on a single currency like the US dollar. It supports economic stability by acting as a safeguard against crises and currency fluctuations, bolstering national wealth and monetary policies. Geopolitically, gold reserves enhance global influence, provide leverage in trade and diplomacy, and serve as a strategic asset during tensions. Additionally, gold's role as a long-term store of value ensures steady demand regardless of short-term market fluctuations. As of 2024, the United States holds the largest amount of gold reserves in its central bank compared to other countries, with 7.1 thousand tons, representing 0.75% of its reserves. Germany and the IMF also have significant holdings, with Germany holding 3.3 thousand tons and the IMF holding 2.8 thousand tons. China and Russia have large gold reserves, but the percentage of reserves is smaller compared to countries like the United States and Germany. Portugal, Uzbekistan, and Italy each have notable gold reserves with their percentage of reserves nearing 0.7%. India, Japan, and Saudi Arabia hold relatively smaller amounts of gold compared to global leaders. Thank you very much for your kind listening.